The difference between profitable and non-profitable traders isn't luck or talent. It's having a systematic approach that captures both trends and reversals using proven mathematical principles. And that's exactly why you need this powerful indicator I'm about to show you. To add this indicator to your chart, head over to TradingView and search for Fibonacci entry bands. Make sure you select the one by Algo Alpha. I'm using the 15-minute time frame on Euro-Dollar, but this wealth-building system works across all markets and time frames. Now, this isn't another basic Fibonacci retracement tool that most traders use incorrectly. This is a system that combines the mathematical precision of Fibonacci levels with dynamic volatility adjustment for maximum profit. What makes Fibonacci entry bands so powerful is its hybrid approach. It uses the sacred Fibonacci ratios 0.618, 1.0, 1.618, and 2.618 as multipliers on volatility measures to create layered profit zones around a trend-following moving average. During uptrends, only the lower bands become active, giving you precise entry points on pullbacks, and during downtrends, the upper bands activate, catching perfect short entries on rallies. Now, after loading it on your chart, you'll see the smoothed basis line that uses double EMA calculation to define trend direction without lag. The entry arrows appear at the outermost bands during trend shifts, marking maximum profit potential entries. But before we optimize the settings, most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Next, let's get your settings right for the best result. Double-click on the indicator to access the settings panel. You want to set the basis length to 21 for the optimal balance between trend identification and noise filtration, because this double EMA smoothing eliminates false signals while maintaining responsiveness to genuine wealth-building opportunities. See this aggressiveness setting right here. It controls take-profit sensitivity. For conservative posture, you want to use low aggressiveness to hold winners longer. But for active trade management, I recommend you use high to capture smaller but frequent gains. Once you're done with that, click OK. Now, let me show you 3 market conditions where this system becomes incredibly useful. In trending markets, first, you want to confirm you're in a strong trending environment where the Fibonacci entry bands truly shine for wealth accumulation. During these conditions, the system only activates bands in the trend direction, which ensures you're always trading with institutional momentum rather than against it. Then, wait patiently for the entry arrows to appear at the outermost Fibonacci bands, as these mark maximum profit potential entries. In uptrends, look for arrows at the 1.618 or 2.618 lower bands. In downtrends, watch for arrows appearing at the upper bands. After that, implement the systemic position sizing strategy by starting with your normal position at the first entry arrow. If price continues favorably to the next Fibonacci level without stopping you out, add to your position using the bounce signals that appear. When all these conditions are met, place your stop loss just beyond the outermost band you entered from. Then take partial profits when you see the take profit crosses appear, but let your core position run until the trend changes direction completely. In ranging markets, the bands act as dynamic support and resistance zones within the established range. First, watch for price to reach the upper bands during range highs and enter short positions when you receive the entry arrows. Conversely, look for buying opportunities when price reaches lower bands and triggers entry signals. After that, take advantage of the mathematical precision that Fibonacci levels provide by using them as exact entry and exit points. This removes the guesswork that destroys most traders' accounts during ranging conditions. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, different markets require different settings for maximum profits. For Forex majors, you want to set basis length to 25 and use ATR volatility method. Major pairs trend smoothly during session overlaps, so they need slightly slower settings to avoid noise. For gold trading, you want to use standard deviation volatility with a basis length of 18. Why, you ask? Because gold's explosive moves require faster Fibonacci band adaptation to capture those breakouts. For crypto, set basis length to 15 with ATR method and high aggressiveness, because crypto's volatile nature provides frequent trading opportunities but requires faster settings and more active profit-taking to compound gains effectively. For stocks, use standard deviation with basis length of 30. Thanks for watching, and I'll see you in the next one.